You know, I'm not sure if you could find a worse sector to invest in since 2011 than mining. It's been a total disaster with just about every company in the industry has gotten smoked. And we talk about an industry, a cyclical industry that's been depressed for 7 straight years. Which has been brutal, completely brutal for investors. And being honest here, it's difficult to see a short-term catalyst. It's going to make this sector favorable again. Long term, it's cheap, it's crazy. But let's be honest here when it comes to mining. It is one of the crappiest businesses in the world, right? You have your big producers whose margins are pretty low considering all-in costs are around 1,000. Some of them say 900, some of them say 1,100, but around 1,000 on average, depending on the producer. You have gold prices around 1,250, 1,270, 80 around there. So, I mean, the margins are not that great considering, these are the big guys. They're blowing up mountains. I mean, I saw a lot of these projects. I mean, Cortez in Nevada. I mean, unbelievable what Barrick is doing there. You'll see like half a mountain blown up, these massive trucks. I mean, you talk about the employees they have. Newmont has over 12,000. This is, pre-Gold Corp who they taken over. Barrick has over 17,000 employees. It's a very capital-intensive business. Raw material costs are a big factor. They can go up to the point where it's adding another $100 to your all-in costs, like the next quarter or 6 months later. And inflation, there's so many things involved for, it seems like such little margin. But when I look at these names, even the big producers, I mean, Barrick is trading at $11 right now. It was $50 in 2011. Newmont Mining was $70 in 2012. It's trading around 31. Name that I like. I mean, from 70 to 31, actually, that's not that terrible. It might be one of the best performers. Down, and that's down a little bit more than 50%. That's how much some of these companies got smoked. You look at Gold Corp, another company trading around 11 today. It was $55 in 2011. You can see why there's so many large cap mergers taking place right now in the market. This makes sense. These things are trading at significant discounts to where they were 7 years ago, 6 years ago, 3 years ago even. And when you look at the mid-tier producers, like the Yamana Golds, Eldorado, AIM Gold, I mean, life is really, really tough for these guys. And these mid-tiers have higher costs. Their balance sheets aren't as strong. Have to be careful what projects they choose to invest in, drill, because their margins are lower than the majors. You look at Yamana, that was a $20 stock. It's now below $2. Eldorado was over $80 a share in 2011. It's $3 today. This is common. EM Gold was $22 in 2011, and it's now under $2.50. That's the mid-tiers. Then when you get to the junior miners, whole different story. Forget about it. And most of these guys own projects that can only be produced at $1,300 plus gold prices. I might be conservative there, but unless you see gold go to 15, 16, 17, and they go to 1,300, doesn't mean, wow, let's develop this. No. I mean, they could fall over, it was 12, 15 years to develop a mine. I mean, they could fall considerably. You'd like to have that cushion. Hey, $5, 16, $1,700 gold prices where a lot of this makes sense to start developing $13, $15, $1,400 projects, where that's the break even if they develop that project over a certain amount of years. And when you throw in the fact that only one, and this is a Rick Rule stat that I love, 1 in every 3,000 gold projects goes from that early stage development to actual producing mine, 1 in every 3,000. So to put that in perspective, guys, the next time you go to a junior mining conference, you look around at all those companies. There'll be a few hundred there. Sometimes there's 1,000 there, depending on what conference, and the PDAC and stuff like that is one of the biggest. But you got to figure 85% of those companies are probably not going to be around 7 years from now, 8 years from now. So those things, listen, they're going to raise a lot of money. They're going to develop. I get it. I understand it. But man, it's going to be really tough. Most of those companies are not going to survive. Doesn't mean you can't make money on them. It's like investing in biotech where phase 1 could be great. Phase 2 could be great. You can make hundreds of percent, if not 1,000% gains. And then maybe they don't get to phase 3. And, you see that same thing in different stages. It's pretty crazy when you think about it, you look at